Howdy, everybody. Welcome to the Liberty Call. Today is Thursday, June 5th, 2025. Hope you're having a fantastical day out there in the interwebs. It is a pretty nice day here in Colorado. Back we're in short sleeves and shorts. So it is certainly more comfortable than yesterday with the drizzly and 40-degree weather. And the same on Tuesday. It was cold then, too. Anyways, all right. Well, let's jump to the markets. Markets slipped as mixed signals kept investors guessing. A Trump G call sparked some trade optimism, but rising jobless claims and a Tesla free fall dragged sentiment down. Elon's feud with Trump flared again, while Circle made a moonshot New York Stock Exchange debut, surging over 120%. Meanwhile, Procter & Gamble plans 7,000 layoffs after missing sales targets. All eyes now turn to tomorrow's jobs report. So before we break all the news down, Elon just a few minutes ago dropped a bombshell. He said the reason that him and Trump are getting into a bit of a verbal spat online, but he said that Elon said that Trump, the reason that the Epstein list hasn't been released is because Trump is on it. Crazy. Anyways. All righty. Well, let's jump in. Oh, but hang on. But before we jump into all the markets and news, I need some help from you. Give him some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All right. Now we can get to the markets. Dow Jones was down 0.25%, 108 points, closed at 42,319. S&P 500 down 0.52%, 30 points, closed at 5940. NASDAQ down 0.83%, 162 points, closed at 19,298. The VIX was up today, 4.83%. It's at 1847. Canada up 0.05, Brazil down 0.53, and Mexico up 0.54. Headed to Europe, Germany up 0.2%, the UK up 0.11%, France down 0.18%, the Netherlands up 0.16%, Spain up 0.73%, Italy up 0.74%, Switzerland up 0.21%, and Portugal up 0.02%. Russian exchanges split today, MOEX up 0.53%, RTSI down 0.27%. And the overnight markets, the Nikkei in Japan was down 0.51%, Australia down 0.03%, New Zealand up 0.63%, in China, the Shanghai up 0.23%, Shenzhen Component up 0.58%, China A50 up 0.17%, DJ Shanghai up 0.23%, Hang Seng up 1.07%, and the Taiwan weighted was up 2.32% when it closed on the 4th. All right, so good stuff. Alrighty, well, let's get to the market recap. S&P 500 gives up gains as traders weigh Tesla slump, a positive Trump G call. All right, the S&P 500 ended lower on Thursday as markets digested mixed economic signals, a renewed spat between Elon Musk and Donald Trump, and a promising call between U.S. and Chinese leaders on trade. Tesla shares plunged over 8% after a public fallout between Musk and Trump. Musk criticized Trump's new budget plan, prompting Trump to express disappointment. To which Musk fired back, claiming Trump wouldn't have won without his support. The souring of their previously warm relationship weighed heavily on Tesla stock, given the perceived political alignment as a tailwind for the EV giant. On a more positive note, President Trump and President Xi Jinping held a 90-minute phone call focused on entirely on trade, including rare earth exports. Both sides agreed to resume trade negotiations, and the U.S. officials are set to meet with their Chinese counterparts soon. Trump called the discussion, quote, very good, end quote, and announced mutual invitations for future state visits. Labor market data continued to show signs of softening. Initial jobless claims rose to 247,000 last week, up from a revised 239. And the 4-week moving average also ticked higher. The data alongside the weak ADP job gains and rising layoffs suggest Trump's tariff policies may be beginning to dampen hiring. Minneapolis Fed President Neil Kashkari acknowledged signs of a slowing labor market and emphasized the need for a cautious Fed stance amid economic uncertainty. On the earnings front, Broadcom is expected to shed light on AI chip demand, while Five Below and MongoDB both reported strong results. Mongo's DB stock surged on upbeat guidance and an expanded share repurchase program. All right, so that's the news. Let's get to our data report here from First Trust, April international trade. This was put together by Strider Elas. Get my summary up here. All right, the U.S. trade deficit narrowed sharply in April, shrinking by a record $76.7 billion to $61.6 billion, driven by a deep drop in imports and a solid increase in exports. Imports fell by an unprecedented $68.4 billion, largely reversing the first quarter surge caused by businesses rushing to buy goods ahead of Trump's new tariffs. Pharmaceutical imports alone dropped by $26 billion in April. Because imports subtract from GDP, the Q1 import spike significantly weighed on GDP growth, contributing to a 0.2% annualized decline in real GDP. With tariff front running now over, imports are expecting to remain soft in the coming months, like boosting Q2 GDP. However, ongoing uncertainty around trade policy continues to complicate economic forecasting. Notably, global shipping data from Vizion shows a sharp drop in container bookings from China to the U.S. in April, followed by a rebound in May after Trump reduced tariffs on most Chinese goods from 145 to 30%. Year over year, the U.S. trade volume is up 5.7%, with exports rising 8.6% and imports up 3.4%. China has slipped to the U.S.'s third largest source of imports behind Mexico and Canada. Meanwhile, the U.S. marked its 38th straight month as a net petroleum exporter. Separately, initial jobless claims rose by 7,000 to 247, while continuing claims dipped slightly, supporting expectations of 109,000 increase in May's non-farm payrolls report. All right, so we've got some data there. Got some more data to go over. U.S. worker productivity slumps in the first quarter. This was from investing.com. Righty. U.S. worker productivity declined more sharply than initially reported in the first quarter of this year, contributing to a surge in labor costs amid rising input costs caused by tariffs. According to the Bureau of Labor Statistics, non-farm productivity measuring hourly output per worker fell at a 1.5% annualized rate, down from the earlier estimate of a 0.8% drop. This marks the first decline in productivity since Q2 of 22 and suggests increasing inefficiencies in the workforce. On a year-over-year basis, productivity rose just 1.3%, slightly below the previously estimated 1.4%. Meanwhile, unit labor costs, which track the cost of labor to produce one unit of output, spiked 6.6% in Q1, a significant upward revision from the earlier 5.7% figure. Labor costs increased 1.9% over the past year, also revised up from 1.3%. These figures highlight the growing pressure on corporate margins, which are already under strain. Many companies, including airlines, retailers, and auto manufacturers, have withdrawn or delayed financial guidance for this year due to the uncertainty surrounding President Trump's fluctuating tariff policies. Economists warn that the combination of falling productivity and rising labor costs, coupled with trade policy uncertainty, could dampen business investment and consumer spending, putting further pressure on economic growth and corporate profitability. That's some awesome news. Again, if this is the slowdown that leads to the Black Swan event, again, I wouldn't be shocked. I also wouldn't be shocked if things, better data comes out next month and everyone's in a better mood. So it's just kind of the way things are right now. All right. Last up, got an article from Zero Hedge. Coal is the new bridge fuel. This was written by Bernard Weinstein of Real Clear Energy. All right. So let's see what he had to say. The U.S. faces a potentially challenging summer as power grid reliability is once again in question. Government and private forecasters predict above average temperatures across most of the country, and grid operators like the North American Electric Reliability Corporation, NERC, have warned of heightened risks of blackouts and brownouts. NERC specifically cited the Mid-Continent Independent System Operator, MISO, as especially vulnerable. Their concerns proved accurate when over 100,000 customers in the New Orleans area lost power on May 25th due to demand outstripping supply. The root problem lies in rising electricity demand and insufficient reliable supply. Demand, which was stagnant for a decade, is projected to increase by 50% over the next 10 years, fueled by data centers, AI, crypto mining, and industrial growth. Yet baseload power plant construction, natural gas, coal, and nuclear has sharply declined. Instead, tax incentives have heavily favored intermittent sources like wind and solar, which often fail during peak demand. Who could have seen that? The Trump administration has acted to keep aging coal plants online, including executive orders signed in April to prevent premature shutdowns. With 300 coal plants already closed since 2010, only 200 remain, supplying 16% of U.S. electricity, down from 45%. Despite environmental opposition, the reliability of on-demand power from coal is proving essential as the country transitions to a more resilient and balanced energy future. Yeah, and I mean, I've been banging on my desk for more than a decade that we should be building nuclear power plants all over the country. I mean, there should be several for every major metropolitan area, powering, energizing those cities. And it would bring the cost down dramatically for people who are who rely on electric for heating, cooling, everything else that they do in their lives. And I mean, because we use natural gas for our heating, cooking, and all that good stuff. The only thing the electric runs is like TVs and electronics. So our bill is fairly static every month. But for people who I've lived in homes where it was an all electric house, and if the power goes out, you don't have any hot water or anything like that. So, well, I have an on-demand system, so I don't have hot water either. Because if the power goes out, then the system shuts down. Even though there is natural gas to heat the water, it doesn't work when the power doesn't work. So, anyways, all righty. Well, that is everything that I had to ramble about today. So, if anyone needs to get in touch with me, where do you want to go? Doodle-doo-doo-doo, DSAFinancialGroup.com. All your financial planning needs can be addressed there. So, give me a ring. I'd be glad to help. Hope everyone out there has a wonderful evening, and we'll talk again next time. Adios.